Thank you, CFTE, and hello, everyone. So last year, I was co-program director of the specialization Open Banking and Platforms, and I literally spent months working with dozens of experts on creating the online course. So 5 minutes is definitely a challenge, but I'll try to meet it. So first, open banking is a lot of things. Regulations such as open banking or PSD2, technologies such as API or cloud. But for my presentation today, I will focus on 3 areas which I find really important. First, open banking as the catalyst for the business model of platforms. Secondly, how it changes the user experience, what we call embedded finance. And finally, how open banking lowers the barrier to entry for new entrants in finance. In terms of business models, platforms and digital platforms are really transforming all industries. So instead of having companies that are vertically integrated, we now have companies that connect people together. For example, Uber that connects drivers to riders, or Airbnb or Facebook. In the digital world, this is extremely powerful and helps companies to hyperscale, which is why amongst the 10 largest companies in the world, 5 now use a business model of platform. This is now also the case in finance. 10 years ago, the 10 largest financial institutions were all banks. Today, there are 5 banks and 5 that leverage on platforms: Visa, MasterCard, Ant Group, PayPal, and Tencent. So platforms are conquering the world and finance too. From there, the race to build the dominant finance platforms is definitely on. You might remember that in January 2020, Visa announced the acquisition of Plaid for $5 billion. The objective, to advance a strategy of network of networks thanks to the open banking infrastructure of Plaid. A year later, the deal was scrapped. The official explanation was the lawsuit from the Department of Justice. However, I think there's another explanation that was actually seller's remorse, with Plaid thinking that they might have sold a bit too low. 4 months later, Plaid actually raised money at a valuation of $13 billion, 2.5 times more than the Visa deal. But Visa didn't stay idle and bought one of Plaid's competitors, Tink, for $2.2 billion. We're talking about billions of dollars, and that shows the importance to have a head start in owning the first platform. In platforms, more than other areas, there's really a winner-takes-all advantage. Thirdly, one of the first real platforms in consumer finance was acquired. It was 1 year ago, and that was Credit Karma, acquired by Intuit for $8 billion. Credit Karma follows the model of Google, but in finance. Google provides a free service to users and makes money by helping advertisers target users. Credit Karma provides free credit score and in exchange helps credit card and mortgage providers market to these clients. The result, 100 million clients in a few years and a multi-billion-dollar acquisition. Finally, the benefit of open banking for users is embedded finance, or what I'd like to call invisible finance. In practice, it means that financial services will be embedded into our day-to-day activities, but also that many companies will be integrating fintech directly in their business model. Good example is Booking.com, which announced this summer the launch of their fintech unit with 400 people to integrate payments for their users and partners. And so finally, what is the future of open banking? We can only guess. But in a previous life, I was in telecom, and I see open banking as the iPhone moment of the industry. What the iPhone did was to build a huge business for Apple, but much more than that, it gave the platform for millions of app developers to build their own business and to become hugely successful. Open banking does the same and facilitates the creation of fintech businesses. So in the same way that we saw WhatsApp acquire 500 million clients in 4 years and be acquired by Facebook for $19 billion, it is very likely that we will see startups leveraging on open banking to become very big, very quickly. So thank you very much. And back to you, CFT.
Thanks to the CFTE, I'm Paolo Seroni, Global Research Leader in Banking and Financial Markets at IBM Consulting, the Institute for Business Value, and author of this new book released this week, Banks and FinTech on Platform Economies. Now, you all know that the technology was born in the US, regulation is typically born in Europe, but business models are born, largely speaking, in Asia. That's why the FinTech revolution sees the biggest winners nowadays in India and in China. It is important to start discussing business models, then to apply technology within the regulatory context. So open banking needs to be seen from a business perspective, not a technical perspective. Now, in order to explain this to you, I would like to point you to this research paper of the European Central Bank with financial intermediation with technology, what's new. The ECB researchers define financial intermediaries as capable to exert market power if they have superior information and communication. So information for them is core banking, where typically you plug in your open banking APIs, that means payment and the credit function. But they say that more power now is given to interfaces like the wealth management relationship, the relationship with clients, because given the low interest rate environment, especially in the countries like the European countries, everything is shifting towards the relationship with customers. Technically speaking, this means building banking as a service platforms. That means open banking as you know it yourself, that evolves into open finance, but as well as conceiving this platform as a banking as a platform that enables banks to onboard solutions from outside of their turf in order to enrich the interfaces for clients. This leads to new and already revealed platform strategies, which I would call contextual banking, where open banking enables to contextualize into a different ecosystem. The bank becomes invisible to generate value by eliminating frictions, but the bank also needs to remain visible. So that's why I also focus on the definition of conscious banking. Now, it is contextual banking and conscious banking that generate higher business value. How does this happen? I created for you this banking reinvention quadrant, which has the two axes, information quotient and communication quotient. Now, Accenture tells us that $1 trillion were spent between 2015 and 18 on digital transformations, but most digital banks are chrysalids, not many became butterflies. Why is that? Well, because banks did not understand the difference between output economies to outcome economies that work on open ecosystems. And largely speaking, they did not understand that the mobile is a pull technology, a technology for the demand, but most of the revenues that matters, looking at interfaces, operate in an offer-driven business, is a push economy. So then it is important to understand how to use open hybrid cloud, blockchain, IoT, the API economy on one side, intensifying the information quotient. It is important to understand how to plug in trusted data and AI in order to enrich, if not replace in some cases, the relationship to make them transparent and intelligence, to build higher intelligence automation that enables banks and fintech to reach out these two value spaces of contextual banking, the bank is invisible, and conscious banking, the bank is visible. The core is really to understand the difference between output and outcome, push and pull that you can find in banks and fintech on platform economies. Now, why does this matter? If you look at this graph, this has the percentage share of market evaluation among top 500 global banks, payment providers, and other fintech. You see that in 2010, the global banks represented 95% of market cap, but now in 2020 and further down in 2021 is less than 75%. And payment firms are becoming very aggressive. They start to become aggregators. They want to become super apps. They want to win in the platform economy, shifting from outputs to outcomes. So it is very important that we understand how banks and fintech can operate on platform economies, because the real competition will be there. The real landing unicorns will all be there. Now, I leave you with this that is very important. I said there are two platform strategies which can be underpinned by open banking and open finance. One is contextual banking, the other one is conscious banking. It is the opportunity to eliminate frictions that makes banking contextualized, and it is the need to demonstrate value for clients that makes banking conscious. You will find all of this in Banks and FinTech on Platform Economies, released this week. Happy to participate in this conversation on the CFTE, and I give it back to the CFTE.
Thank you very much, CFTE. Thank you very much for the kind introduction. Ladies and gentlemen, it's a great pleasure for me to give you an update on the key trends in open banking. The Payment Services Directive 2, or short PSD2, went into force in Europe in 2019. So the European community has now been under uniform open banking regulation for quite a while. So far, the regulation seems to have been a success. The number of registered third-party providers doubled from January 2020 to December 2021. Open banking API usage across Europe is distributed roughly proportionally to the GDP of the individual countries. So it seems that market acceptance is more or less the same everywhere. But more than 100 of the 300 TPPs have their home base in Scandinavia and in the Baltics. Together, these countries represent less than half of Germany's GDP, or roughly 10% of Europe's GDP. On the other hand, Southern Europe hosts only about 30 GPPs and represents roughly a quarter of Europe's GDP. This observation is in line with general tech startup activity. Fintechs need the same academic, cultural, and financial ecosystem as tech startups to thrive. Open banking regulation in many countries is focusing on consumer services. However, it is my experience that open banking, or more generally API-based banking, offers bigger opportunities to corporate banking than to retail banking. Think of a corporate enterprise resource planning systems tightly integrated with the bank. You can automate payment processes, reducing costs and errors. Additional services such as cash and expense management become possible. Direct access to corporate data from the ERP may even simplify credit risk management. This really creates value for everybody. Such services have been in place for large corporate customers for a long time. However, standardization as driven by open banking makes such business models accessible to small and medium enterprises. Open banking becomes particularly interesting when it is integrated into a corporate ecosystem to provide the consumers with more comprehensive services. Think of the bank providing identity and payment services in a larger e-commerce ecosystem. Large tech companies and pharmaceutical companies have long used an ecosystem of startup companies to drive innovation. More recently, banks have started to follow that lead. Key to that strategy is a rich offering of banking APIs that lets partners innovate on top of existing services. Developers in this scenario become key stakeholders to financial institutions. In order to attract developers to their ecosystem, they offer comprehensive software environments with an API gateway, test sandboxes, and so on. Street credibility with developers is a key marketing objective. Banks start sponsoring developer conferences, open source efforts, and hackathon, and many other things. On top of attracting individuals, financial institutions also need to be attractive to startups. They do this by providing corporate venture capital, participating in incubators, and other activities. Topics like co-branding, revenue sharing, and partner marketing in this ecosystem are essential. Providing competitive API services on top of legacy banking platforms is an enormous challenge. New requirements include true 7x 24-hour availability, low latency response time, despite widely fluctuating volumes, additional security threats, and many more. Often the first reaction is to build a new front end, more or less detached from the banking core. But this strategy is expensive as you start replicating most of the core functionality in the front end. And it leads to data consistency issues around time-critical information, such as the available account balance. Modern cloud infrastructure solves many of these problems. However, it is not easy to redeploy the old platforms on top of the cloud. Therefore, I believe open banking acts as a catalyst for core banking system renewal. Predicting the future is notoriously difficult, but let me give it a try. Despite the initial focus on retail banking and payment, I believe that the true value of open banking will be unlocked in commercial banking through digital ecosystems, where the bank is one of the partners. B2B and B2B2C business models will become the real drivers for open banking. Second, I believe new bank players I believe new players in banking will be much more focused on a single market, product, or process. I don't expect the leading fintech players to develop into universal bank. I expect them to combine their strength in ecosystems to offer comprehensive solutions to clients as a group. Whilst banks have mainly invested into new digital front ends and data analytics recently, I believe that legacy banks will have to shift investments to their core banking systems, as it will be hard to deliver digital services at the right cost point and at the right quality point on top of current platforms. Branding will become more of a challenge for banks. Branding will become more of a challenge for banks as their services will become more and more invisible as a part of a larger digital process. So the marketing focus will have to shift away from the retail client and really go to a product manager or software developer who decides which services to integrate into the digital journey. Finally, thank you very much for listening to me. I wish you a great time at the Singapore FinTech Festival. Back to CFTE.
Hello, everyone. My name is Carlos Figueredo, and I am the CEO of Open Vector. And I'd like to talk to you today about a really important subject in regards to open banking. So let's get right to it. First topic I'd like to talk about is Latin America. As you know, Latin America has really been the exciting region in regards to open banking and open finance, simply because of the so many countries that have taken on this initiative, the buzz that there is around fintech, and the amount of investment that has come in the area. So many unicorns are coming out of Latin America simply because they are realizing the opportunity of sharing data, of creating products and services for consumers, and obviously regulators that are seeing that ability. Here we have examples of what Colombia is doing, where they have now finally launched their regulation around open banking, though it is a more Singapore style, not a regulated or really structured regulation in that sense. It's still enough to be able to kick things off. Brazil, excitingly, starts their third phase of open banking, which has gone live, and there's even a fourth one already in the works for December of this year. The third being primarily around payments, and the fourth being about Brazil moving into open finance. So how exciting is that? In regards to Mexico, and I must remind everyone, was the first open finance country in the world, is even continuing to push the work that the great work that they've done, with over 4,000 financial institutions or entities in themselves having to comply with regulation. So many fintechs that are already part of this initiative, and so many big techs that have opened offices there. It's exciting to see how the regulator, in this case, as you can see here on the right, is pushing for this initiative even further. Now, as we go into some of the exciting news around the UK, we've noticed that as of 2019, there were already conversations around open finance, and we now already see it with the papers that have gone in, where we are looking at cross-sector opportunities around open finance for the UK. And that is really exciting if we see the potential of all of the fintech community, the strong fintech community that we have in this country, but as well as just everything, all the work that has been done. Now, having said that, the only other news that unfortunately throws that a little bit off is the stepping down of the chief of OBIE, as you see here in this article you may have heard. So the reason why I bring this up is I just don't want to take away from the great work that's been done in the UK by this news. There's already someone else in place, and we're going to continue to work really hard to continue to make the UK strong in the open banking and open finance state. Everyone asks me about the US. What is happening in the US whenever I speak at a conference? Well, we have some good news in that perspective. And in this case, the CFPB, or the Consumer Financial Protection Bureau, has been nudged by President Biden to look into a regulation around the sharing of data. The only challenge to that, as I see it personally, is unfortunately for the fact that there are 4 different regulators, the geographical and regulatory aspects that are going to hinder that moving as quickly as we need to. Nevertheless, consumers are already looking at or taking advantage of the things that are happening through some of those payment unicorns that have come out of Silicon Valley and around the US. So stay tuned to see what happens. Very exciting to hear the news about the US. Now, is open banking going anywhere? My topic 4 out of the 5 slides. It's not going anywhere. We've unfortunately had Ms. Bowden here from Starling Bank say that open banking is a flop. Well, it definitely is not, and that's why she gets a big wrong from me, in the sense that the reason why she believes it's a flop is because Starling Bank has come up with still traditional ways of thinking, traditional banking, traditional products and services that just don't make money. So of course it's a flop. If you're a traditional bank, open banking does not make you money. What does make you money is if we talk about it from a purely commercial and monetization perspective, is the ability to cooperate and collaborate with fintechs in order to create new products and services, or you yourself start thinking in that way. Starling Bank has announced a series of products this week that start to focus more on that ability. So Ms. Bowden, the answer is no, you're wrong. On the other hand, if you keep looking at breaking those traditional frameworks, I believe that you will see an advantage of what we're doing. As you can see here on the right, with some exciting news around payments. Open banking is definitely happening, and it's happening all over the world. It's super exciting to see so many countries are continuing to push forward. This map from OpenVector is already a little bit outdated as we continue to see work happening in MENA, the Latin American region, and the African region. So with all of this, I'd like to thank you very much for listening to this and see you really soon. Thank you.